Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. On one hand, investors love energy stocks because they can provide big dividends. But on the other hand, energy stocks can be volatile, rising and falling on price of crude, where we are in the economic cycle and geopolitical tensions. But not all energy stocks are the same. One energy play that has been rewarding buy and hold investors with excellent long-term capital appreciation and reliable growing dividend is Enterprise Product Partners L.P. They're traded on New York Stock Exchange under symbol EPD. Not only has this company raised its annual distribution for the last 27 years, making it a dividend aristocrat, but the stock is thumping the broader market, having just hit a new record high. John?
Yeah, thanks, Mo. Enterprise Products Partners might sound like a generic multi-level marketing company, but it's actually a midstream oil and gas company that is responsible for moving natural gas liquids, crude oil, and petrochemical and refined products. It gets paid whether drillers are making money or not. That's because it earns a fee for each barrel that gets shipped. And it has a lot of pipeline through which things can get shipped, 50,000 plus miles of natural gas liquids, crude oil, refined products, and other petrochemical pipelines. Now, its combined operations also include, I'll just throw out a few numbers, 260 million plus barrels of natural gas liquid, refined products, and crude oil storage capacity, 5 new gas plants in 24 to 2026, which will increase processing by 1.5 billion cubic feet per day. And it also owns 20 deepwater docks, which handle natural gas liquids, petrochemicals, crude oil, and other refined products.
It has a history of reporting strong financial results.
Yeah, it does. For the second quarter ended June 30th, 2024, Enterprise announced that net income increased 12% year over year to $1.4 billion, or 64 cents per unit. Distributable cash flow was $1.8 billion compared to $1.7 billion in the same period last year. Now, adjusted free cash flow from operations was $2.1 billion compared to $1.9 billion in the second quarter of 2023. And adjusted cash flow was $8.4 billion for the 12 months ended June 30th, 2024. During the second quarter, the partnership repurchased $40 million of its common units. Now, including these purchases, Enterprise has so far purchased 50% of its $2 billion common unit buyback program. The company didn't provide any guidance, but Wall Street analysts expect Enterprise earnings to grow from $2.52 per share in 2023 to $2.72 per share in 2024, and to rise to $2.86 per share in 2025.
I briefly mentioned that Enterprise is a dividend aristocrat, meaning that it increased its annual dividends for at least 25 consecutive years. Could you elaborate a little bit more on its dividends?
Yeah, thanks to its reliable cash flow of $4.3 billion in 2023 and $6 billion in 2022, Enterprise has been able to provide shareholders with a growing annual distribution and buybacks. In 2023, it repurchased $918 million of its common shares. As you noted, it's also a dividend aristocrat, having raised its annual dividend for 27 consecutive years, but sometimes it actually raises its payout more than once a year too. In July, Enterprise declared a quarterly cash distribution of 0.525 cents per unit, or $2.10 per unit on an annual basis, and that works out to a current yield of 7.26%. The 0.525 quarterly payout also represents a 5% increase over the 50 cents they paid out in the third quarter of 2023. This also marks the second time Enterprise has increased its distribution in 2024. Now, the dividend payout is safe as well, with a payout ratio of just 77.4%. Now, there's every reason to believe that Enterprise will keep its status as a dividend aristocrat alive in 2025 and beyond. In fact, if you check out their investor presentation, Enterprise Products is the only company with an A rating and a dividend yield in excess of 7%.
And also, let's talk about EPD share prices as well. I see that they're doing quite well in outpacing the broader market.
Well, yeah, dividend hogs can't help but be impressed with the company's 27-year track record of raising its annual dividend. They also must be pleased with the partnership's incredible long-term capital appreciation too. Further back, over the last 25 years, with dividends reinvested, EPD stock has returned profits of 2,463% over the same time frame, The S&P 500 has returned profits of 302%, and the Energy Select Sector SPDR Fund has returned profits of roughly 430%. Now, again, that's with dividends reinvested. Had you opted to take those quarterly payouts in cash, EPD's total return over the last 25 years slips from 2,463% to 544%. Now, the company's near-term gains have been impressive too. On July 30th, EPD stock hit a new record intraday high of $29.86 per unit. It continues to trade near those record levels and is, as of this recording, up 17% year to date and almost 19% year over year. And the outlook for EPD stock remains robust too, with Wall Street analysts providing a 12-month share price target range of $33.08 to $37 per share.
John, thank you so much for your insight. What's not to like about Enterprise Product Partners L.P.? The company continues to report excellent financial results, expand its operation, and make strategic acquisitions. Thanks to its diversified fee-based structure, Enterprise is able to report consistently strong financial results, which helps support its growing annual dividend and juice its share price. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned, and in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.